Hello and welcome to another educational session from Not Your Money. When we talk about Bitcoin, Ethereum, Binance, Cardano, Cosmos, and so on, many people think about the tokens rallying up and down in search for profits. But most people fail to comprehend what is actually going on under the hood and what is really enabling a thriving economic and financial system. So today we're going back to first principles with our experts, Marco and Maxime, here on the screen with me. We will not talk about tokens, markets, and prices, but we'll provide a panoramic overview on blockchains. This will help you understand how they work, where they differ, and where the magic really happens. So let's dive in, Marco. Let's start with you. Please, can you help us understand what type of blockchains exist and what the key features are?
Yeah, thank you very much, Francisco. So different type of blockchain. Blockchain, first of all, we have to remember what it is, right? Let's start from this. Basically it's a public ledger, but already I would say that it's more like a ledger, and then let's describe if it's public or not. Public ledger per se just mean that it's a ledger, so a database that has a specific characteristics of being only write only. So you cannot alter the state of the blockchain, except you can only create a new state. So you cannot modify the current state without creating a new one. You cannot delete. You can only add. And that's important because that's the key evolution for which blockchain is used for, and every information is connected to the next one. So at any point in time, at any entry n, you can access everything before, but the next one is connected to the previous one.
Yeah.
So as we said, in terms of public ledger, yes, public because inside the use base of the blockchain has public access to that. But generally, when we're talking about blockchain, we refer in terms of privacy status, so public, private, hybrid, and inside the hybrid there is different setup. We mean how those blockchain generally work in their ecosystem. So, for example, a public blockchain is a blockchain that is accessible from anyone. Anyone can access that blockchain. Anyone can explore it. Anyone can look at what's written inside. A private blockchain is instead a blockchain that is only accessible to those members who have the access to the ecosystem, to the blockchain itself. And for example, we can see that the database of a bank is accessible only to some people inside the bank.
Yeah.
But it's not accessible outside. The same story here with some specific blockchain that they're built that allows only access to it to the people that are in that ecosystem. And then we go into the hybrid, which are probably the most interesting one, which are the one that have some part of the blockchain that is private to a certain extent, and other that are public in the sense of that those, like, you can have a certain type of access to read, but only to specific part of the blockchain, not the whole blockchain. Just to give an example here, the public blockchain is Bitcoin, is Ethereum. Those kind of blockchain are completely transparent. Everyone can know what happened at every specific block time. We can go back in time and look at what has happened at block 1 to block 1 million. I mean, there are more, but just to... So there is nothing hidden there. And that actually tells, it's interesting because it tells a story about how the blockchain has evolved, who have done, what has happened, what has transpired at every single point in time. On private one, we do not have access. And on a hybrid one, we can only have access, for example, on the latest state, but not on previous one. So you see how things start to evolve and differentiate between each other.
Thank you. That's great, and hopefully the graphic makes it pretty clear with regards to what the main advantages and disadvantages are to each one. So let's move on then, and maybe Maxime. So keeping in mind the different options we have available, there are many blockchains out there that have to optimize for different characteristics, some of which we just covered on this screen. Take us through what some of those optimization questions are. So the trade-offs.
Yeah, hello, Francesco. I'll cover this one and start on it. I think what we can add also is what you see mostly on the marketplaces, such as CoinMarketCap and all the blockchain you see in the media, they are mostly public blockchain. Like everyone is fighting to see public, and some hybrid, as Marco mentioned, because some of them come with specific features. But when you go to Etherscan and Snowtrace for Avalanche and so on, you mostly are looking to public blockchain that you can track transaction online. Solana is one of them, of course. It's interesting to see what it's mostly about Bitcoin, because the trilemma of Bitcoin at the very beginning was to how we can create a peer-to-peer digital currency that could be scalable, decentralized, and secure, and that everyone could have access to this ledger, to this public ledger, meaning you can go online and see every single transaction. They are immutable, so you can never change it. No one can modify the ledger as they wish, so you cannot erase a transaction. When it's recorded, and you cannot change it. And how it can be secure, because you want your fund to stay there. Of course, you want to avoid double spending, right? You want to make sure that when you spend a Bitcoin, when you receive a Bitcoin, that's in the ledger, but it will never happen twice. In terms of scalability, that's what we have a bit of friction, I would say, on certain blockchain, because being scalable while being decentralized and secure, that's why it's called the trilemma. It's difficult, and that's what we see many blockchain fighting against or competing against each other today, because they have different value proposition. So if you take Bitcoin is highly secure, probably one of the most decentralized, but they are facing some issues with scalability. And you will also hear a lot about fees, because it's expensive to maintain a network like Bitcoin in proof of work. Ethereum is kind of the same. It's secure, it's decentralized. We see some issues with scalability. They have limited number of transactions per second. Also, they are trying to scale with layer 2, layer 3s, but they are facing some issue at the first layer with fees. So the layer 2s are trying to solve the scalability, but when they are solving the scalability, they are facing problem with decentralizations and time to time with security. We have other blockchain like Solana that are decentralized at a certain extent, but it's a long discussion, because each one of us can have their own sensibility, let's say, to decentralization. Something that is decentralized for me might not be decentralized enough for somebody else. Maybe 10 validators is enough for someone to say, okay, this is decentralized enough for me. Someone else would like to have 1,000 validators to say this is how decentralization should work. So there are trade-offs all the time. And today there is a huge fight, because you see those value proposition for a blockchain that can have like, I don't know what are the fastest blockchain at the moment on the market, but they claim to have like 1,000 maybe transaction per second or so on. But they might not be decentralized. And I think security, usually it's not a trade-off, because you cannot afford to have a blockchain that is not secure. In terms of decentralization, there's also, I think, sometimes a misconception here, because it's important that you need to be decentralized, but you also need to be transparent. And that's two different things for me. Like a blockchain could be, from my point of view, you don't need thousands of validators as long as you're transparent. So if we know what's going on the network, if you know what the consensus is, we can access the transaction. We know that it's highly secure. I think decentralization can be a bit more the trade-off here. So if you're secure, if you can scale, if you have low fees, you can say, okay, this is decentralized enough compared to traditional system that we have at the moment that is like completely opaque. Like you have no clue of how transactions are being transferred. You don't know who initiate them. So for myself, the trade-off is mostly now on how decentralized we can be, and for the rest, we're secure, we scale. That's where I think the consensus is at the moment.
Very well.
I interject a bit. Just to make a conversation slightly more interesting to this point. I mean, what Maxime said is all true, right? In the crypto sphere at the moment, there is a lot of discussion regarding the 51% attack. And that has to do with the number of validators. Like this is indirectly correlated, right? Because you can be transparent, you can be completely fair, and still be completely manipulated. And how this happens is basically, let's say you have a super scalable and secure platform, that blockchain that only has 10 validators, and I have 6 of them. Basically, I decide which transaction go first. I can decide which transaction go first. So everything is transparent, but is made in a way, it could become in a way that I take advantage of it. I think that this is I'll leave it as a point, right? It's important to understand that just because it's transparent, not necessarily works with fairness. It works as designed. That should be like the right assessment, right? So works as designed. It's important because yes, there is a superior or is a better evolution compared to completely opaque solution as we have seen, for example, in traditional TradFi, right? Where we do not even know what happens. It's not like we don't see it, it's just we don't know. No. On the other side, it's important to understand that potentially it's not just enough to be transparent. We need also mechanisms to prevent manipulation of the system. So either you scale, and this is a discussion going on, right? It's not solved, but either you scale by sheer number, the amount of validators, or you put benefits and penalties for bad behaviors, or you have re-entry systems. It's a discussion in the sense of it has not been solved. So I think Maxime made a great point by mentioning this, and because it's not yet solved, that's why it's a trilemma, because every time you have to balance out.
Sure. Maybe to add my own perspective on this, I mean, we'll concentrate on the crypto market, but let's not forget that central institutions, central banks are working on their own version of crypto, so they're not optimizing for decentralization. They're going for the opposite. I guess you can't have all three. I think that's what we're saying here, right? So and hence the trilemma. You can optimize for one, maybe two. It's difficult to get the three. Today, I think there's a lot of news. There's a lot of excitement around the scalable solutions, the SAYs, the SUIs that are moving at pace in terms of transaction speed, but perhaps there are compromises on some of the other factors. And we'll look at some examples later on in this overview. But my other thought was, if you think of Bitcoin as the original blockchain, it was created, and we still think of it as digital gold. It doesn't necessarily, if you think of it as a digital asset class, as gold, need to move at speed of lightning. It doesn't necessarily have to. You don't need to access your gold every other minute, and hence that might be a compromise you're willing to take. If you're moving, I don't know, JPEGs, or if you're in gaming, perhaps you're more interested in other features and less so. You may be prepared to take some compromise on security, for example. That's not necessarily what maybe all the founders and developers may tell you, but I don't think you can have all three, or maybe we're yet to see a project that fully sort of maximizes all three of these aspects at once. Any other comments? Otherwise, we can, well, let's move on actually. And let me ask both of you. So we started with Bitcoin, Ethereum came on, ICO craze. We have a lot of blockchains out today, and I suppose in my mind, it looks obvious we're going to live in a multi-chain world. I'm not sure if that's so obvious to everybody, but let's just put it out there. Well, what are your thoughts on, here's just an example of some of the chains that are out there, from Binance to Cosmos, Cardano, Tezos, Tron, and so forth. What's your view on how this universe is growing and where it's going?
Can I start? Because to me, that's it's difficult to keep track, right? It poses a challenge to users because they're like, I'm there myself. I feel the pain. But from a philosophical point of view, so this space, I'll take this angle. This space has not been regulated, and hence it's a space that is innovative. Innovation is brought forth not by regulation, but it's brought forth by competition. So this, if you want, is the most capitalistic place in finance today. Once you have a full set of regulation, basically it's shackles on innovation, because you cannot evolve in a space that is extremely constricted by, this is how you have to do things. Because if this is how I have to do things, then the results can only be the same. There's no space at the end to do any type of innovation. So the space is growing. It's a hassle for users because they see like it's extremely dynamic, and if you lose a bit of, just a track for a couple of months, you see things that you haven't experienced before. But to a certain extent, is the price we have to pay, in my opinion, for evolving into a state where we will find the good enough. We will find solution to problems that we have today. And to the people that were looking for and asking for regulation to come in and think about what regulation really means. I think that there is a whole debate about, I don't think that regulation protects customer. There is no case that regulation have protected anyone from any financial crisis. But definitely it hinders innovation, because you cannot take routes. You can, out of the infinite amount of path that you have in front of you when you are evolving something, you are restricted to choose that one. That's plain and simple. Still, so it's growing, but then we let the market decide, right? So it's an ecosystem that is expanding almost exponentially, but we let the market decide the winners. We do not pick the winners based on what we decide. We regulators decide this is the way to do it. It's the market that decide that, and that's for me, like, philosophically the most important thing. Like, keep the space as free as possible and let the market decide which one is the best one.
I'm going to have to push back a little bit, Marco. I guess my inner Cora as a risk manager leads me to believe that I completely agree that from an innovation perspective, you have to stay creative and allow us wide borders and options available to keep thriving and growing the ecosystem. But at the same time, we've seen lots of failures, governance, and you might be right. I struggle to think of a regulation that has anticipated the next global crisis or protected customers in advance. But certainly, in the absence of guidelines and regulations, we could end up in a very toxic space as well, in terms of, I don't know, market manipulation, treating customers unfairly. Think of Terra Luna as an example of I guess you look at it as a Darwinistic evolution
Yes.
of the space. People just got
Yes.
burned and trashed, and
you cannot create an evolution without you cannot make a cake without breaking some eggs. That's the short answer. Yes.
Great, Maxime. Any other opinions or comments you want to add on this?
If I take it from a bit different angle, today we have, I think, more and more blockchain, and I think the trend is try to focus on specific area, so specific purposes, and serve specific utilities. Because I started to get in crypto in 2017, and yeah, back then I think we mostly had ETH as a smart contract blockchain, and it was used only for ICO. Like the main innovation was like, oh, we can create token with it, right? So that was the main thing. And Ripple was the only one really centralized. Back then it was criticized, but they were doing high-speed transaction. And then the rest of the market was mostly like general purposes blockchain. But their main selling point was like, you can do everything with our blockchain. And I think we are shifting from this like general purposes blockchain to more specific use case blockchain step by step.
I think that's a really good point, Maxime. Actually, it's a great segue to the next part of the overview. I think today, certainly when I talk to friends, family, people, the crypto industry is just looked at a casino of tokens that are trading to make profits. Few people really understand what sits behind that token. What is that blockchain actually trying to do and achieve, and what are the various use cases? And that's where I think this session should come in handy in helping people understand. We talked about the key characteristics, the trade-offs, but as we'll see in the next section, if we pick a few blockchains and break them down into some of their key components, there are so many others that we could have added in here, but we have to stick to a basic minimum. We'll see that actually blockchains are all competing in different spaces. Some might be competing to a degree with one another for similar spaces, but they all exist for quite profound and different reasons and use cases, as you said. So I'll take a crack at tackling Bitcoin. I mean, we've discussed it already. It was the first one created in 2009 as a store of value and digital money. It's there with its own features like the fixed supply, 21 million, censorship resistant, it's unconfiscatable, and it has a difficulty adjustment that keeps reprogramming the blockchain depending on how many participants there are, how many miners there are, and nodes that are active on the blockchain. It works on a proof of work consensus basis. That means using energy and high computation to secure the network. That's according to Bitcoiners, the feature of it, not the bug. So whilst it appears to consume a lot of energy, that energy is required to protect and to secure their digital gold. And that in part explains the fees, which you see further down in the comment, which goes to pay part of that activity. There are lots of miners. I think comparatively speaking, miners for proof of work, validators, but the securers of the network, for lack of a better term. There are over 1 million different miners in a very distributed way across the world. And maybe sort of the technical characteristics on block size. The block size is the actual space of a block, how big a block is to record the transactions that are added to the next block, as Marco explained to us previously. The design from day one for Bitcoin was to keep that block size the smallest possible. And that allows as many nodes and users to actually download the Bitcoin software and run a node. I could do that, you could do it, any viewer could do that, more or less, just because that block size is so small and limited. The higher that block size, the higher the requirement, the computational requirements to be able to run that block, if you like, that node, and therefore, arguably, it becomes more centralizing. So all of that to explain that transactions per second are certainly not great for Bitcoin, and that goes back to your trilemma point, Maxime, that the speed of Bitcoin isn't great. If anyone uses it and has moved it around, they'll have noticed that it takes a number of confirmations before that transaction actually gets executed. So that time to finality can take quite long, can be quite frustrating and nerve-wracking. I've experienced it myself, and you don't know where that money is. You can look at it on the blockchain and Bitcoin Explorer and see where it is, but it takes up to an hour for that transaction to make its way through. $5 to $10 for each transactions. As I said, if you're moving gold around, that's probably a decent compromise for what you're getting with it. And as far as stability, I don't know of any system issues, of any crashes, of any downtime of last 10 or so years. So the uptime has been basically 100%. And every 10 minutes, a new block is added to the blockchain, which is, I guess, one of its key features. Last but not least, its size. Let's not forget that, whilst we're seeing blockchains increase and tokens proliferate, we have 10,000 plus of them around in the market. The market cap is about $1 trillion at the time of recording, and that's still about 50% of the entire market. Hopefully, I've covered Bitcoin reasonably, at least in terms of some of the key characteristics we thought it was helpful to share. But how did I do, Maxime, Marco? Anything I've missed out for Bitcoin? And if not, maybe you, Marco, do you want to take us through Ethereum, and after that, Maxime, Solana?
Yeah, sure. First of all, like Bitcoin, it's undeniable. It's not just undeniable, but we have to understand there is written there, right? The date. Today sounds kind of obvious, sounds very OG, but like we have to understand when this was launched, and for many years, I would say at least minimum a decade, this asset was completely not understood. Like we were not even talking about blockchain. Like people will say, "Oh, but it's internet money, and it's used for the most funny one. It's used to buy drugs, which I think, or to do all this kind of illegal activity. Which, if you go back to what we have said before, it's a public, transparent, permanent record of information. Now, I'm not an expert in illegal activity, but if I were doing illicit activity, I would not my transaction to be permanent, transparently recorded in a database. So yeah, that claim is as stupid as it can be, but it showcases the ignorance that exists around people talking about this. So that is important, right? Because it set the first cornerstone, and Ethereum was built way after it. But Ethereum it basically had a cover, like it inherited a lot of good things, like everything from Bitcoin, and then add something on top. That something on top is the smart contract, right? The Ethereum build was the smart contract. The smart contract, if we look at it from a high level point of view, is basically the services. Because now you have Bitcoin. Imagine you are in 2016. You have Bitcoin. You have that blockchain. You have the ledger. You have the transactions. But the finality was only buying Bitcoin at that time. Now we have Ethereum come in and say, well, it's a new token. Okay, but that's more than that. Now we build smart contract. Why you build smart contract? Because you bring services. What does it mean? It means that now we have, what I can do, right, with within a blockchain is creating services that, let's say latest one, you can buy NFTs. You can create contracts that interact with each other. You can create derivatives on top of Bitcoin and Ethereum. You can create a DeFi, essentially, economics that has to validate transaction. And you have smart contract that, for example, can go and buy something whenever they receive one asset, they can go and buy automatically something while selling something else. So you can actually have financial operation being done on Ethereum, and it started there. That was, again, another evolution in the space. And smart contract, it's important because it's exactly what they claim is contracts. So as a lawyer contract that you draw down, smart, meaning it's automated.
Ethereum really enabled decentralized finance in this true sense, right? You can actually borrow money, lend money, participate in an economy.
If today, for example, if today I want to buy a property, but a fractionalized property, I have a smart contract behind the scene that manage the whole pool of money investors, and it's able to fractionalize and record what belongs to whom. So that's something that otherwise, it takes a lot of lawyers to build up this type of contracts and so on. Like here, it's 100 or 200 lines of code that works. So what Ethereum does is bringing real case scenario of the economy, real economy, into a programmable structure that does not require intermediary, because the intermediary are automated. That's why smart.
Yeah.
And that's the evolution that has brought forth Ethereum. And that's why, if you look at the date, you have 2009 Bitcoin, 2015 Ethereum. And then if you look, and so you see the growth of blockchains is extremely, I would say, flat. And then 2018, 2019, 2020, and 2021, we are exploding now. We are exponentially growing in number, but because we have created enough with the smart contract, and the blockchain brought forth by Bitcoin has become so solid that now we have the power of this exponential growth of blockchains. Before it was not possible. So that's my storyline. It's important here, right?
Very clear, very clear. Just touching on some of the characteristics on the slide. So we can see that speed is significantly an uptake on Bitcoin, which I covered before. Yeah. Time to finality is much better. The rates are cheaper. Not always great. I mean, we've seen recently. I mean, I think it's important to caveat that all of the numbers on this slide have been assembled and put together, but always subject to change. There is a constantly volatile space. Certainly, the fee and speed can change from second to second.
But I think you're correct, Francesco. Again, I'm taking the evolutionary point of view. It's like Bitcoin is now opening up as an L2 to DeFi, but that's a story for another session. But at the beginning, it was only for the transaction of Bitcoins. So the amount of transaction that you can imagine was limited to the amount of users to a certain extent, and to the finality of it, the utility. Well, starting Ethereum, we started to grow into, okay, now we built a smart contract. So we built an ecosystem. Now there are at least 20 different subsectors inside Ethereum, or inside smart contract enabled blockchain, that have different L2 and L3s inside, specifically L3s, that leverage the smart contract, which means that the amount of transactions is 100 times more, or if 1,000 times more, compared to what Bitcoin was before Ethereum. So you see there is a much more transaction per second, but it's compared to Bitcoin. But the volume of activity that has been created is thousands times more, because all the people and all the automated smart contract talk to each other constantly. Every time you make a transaction because you want to access that that DeFi protocol, you create a transaction. But every time, once we create enough smart contract, they talk to each other, they communicate to each other, they transact to each other automatically, even without users, because they need to rebalance, they need to reconciliate, and so on. So we have creating human activity plus automated activity, which is an enormous network and volume of transaction. And this is, it's true for Solana, Avalanche, it's for everyone, for every other blockchain after Ethereum. So the volume of transaction, the volume of request has become so big that to a certain extent, Ethereum is struggling to keep up with the ecosystem that they have created.
So contextualizing, Mark. So Bitcoin came in, it did its, the apex, the nascent blockchain, created digital gold, and it's roughly still doing what it was doing when it started. Ethereum created a new infrastructure and ecosystem that enabled a new universe of use cases, and in a way, by its own creation, has created its own competition. So at the peak of the last bull cycle, Solana, Avalanche, and recently many others are coming about. Maybe here, Maxime, you can take us into the Solana world as an example of a high-speed, high-throughput blockchain that aims to perhaps compete to a degree with Ethereum in some ways, but also differentiate itself entirely in others. So help us explain what Solana is all about.
Well, if we take Solana, and I think we can come back to the trilemma we had and we've discussed before, because taking that angle, Solana took the approach of, say, we can maybe have being like less decentralized, like we will less focus on decentralization, but try to keep the network secure and scalable. And we saw it came from with different problems. For example, we had outage on Solana recently. It never happened that big on Ethereum. I've never heard Ethereum being down for many hours that the blockchain had to restart. And they had to go through that many times, I think more than 12 times since they launched the blockchain, which is, let's say it's not good. You don't want a blockchain to be down, but that's a trade-off they are taking. Like they can say we can be maybe a bit less stable, less decentralized. Of course, if you're less decentralized, you can restart the network because you can put all your validators together more easily, which is more difficult. If you have more validators, it will take more time to restart. But on a pure technical approach, yeah, it's faster, it scales more. So we have, the transaction per second. It's always a challenge to talk about that because there are different ways to measure it, but it's fast enough to basically their goal, the value proposition of Solana that was mentioned by Anatoly, the co-founder, many times. It's to put NYSE and NASDAQ on the blockchain. So their main focus, and that's what I was mentioning before, like we see blockchain focusing on specific use cases. They want to potentially have, let's say, high frequency trading on the blockchain. And that's what they are focusing on. And we see like new exchanges popping on, especially the Jupiter DEX that is trying to, compete as a decentralized exchange to compete with centralized exchanges. And they are trying to build this infrastructure to be fast. So of course, if you're fast and you want to have a lot of transaction, you'd have to take those transaction fees super low, and that's what they are handling, mostly thanks to parallelism and local fee market, which means it's a bit technical. But on Ethereum, if you have an application that is taking a lot of resources, a lot of transaction on the blockchain itself, it will increase fees for the whole network. What Solana managed to do now is, if an application take a lot of transaction on the chain, you will have high fees only for this application, but it won't affect the whole network, which is something quite important. So it will impact the network itself because one application is taking a lot of transaction, but you won't see the fee raising for every single application, which is a feature that is quite important. And they want to scale even more with Fire Dancer that is still on testnet, but they want to increase the speed. So I don't remember the exact TPS. You can check online, the fact check, but it will be fast enough to say we have a blockchain that could like be have a network like Visa running on top of it, I think, at some point. And they are taking this approach. Yeah, it's really, they are kind of competing with Ethereum, but more on the DeFi side, trying really to have a DeFi activity. But we have to keep in mind that today most of DeFi is happening on Ethereum. We will see maybe right after. Most of the devs are still on Ethereum, but they are growing. And another aspect that I like, talking about value proposition, is more the Solana mobile. So they are trying to do this effort to make UX a bit more easy for the end user, and having a app store, so directly on your mobile you don't have to go through those regulation of the Apple and Play Store, and you will be able to have a decentralized app store that you can use directly on your mobile. So that's a completely different topic, but the UX is not something we see on many blockchain, like being an important focus.
Is the Solana phone the first concrete object produced in crypto as a physical retail item? Is there anything else I might have missed?
I think there are kind of, you could compare it with the ledger and the hardware wallet, because at the end they have created the phone, but the phone itself, there's nothing revolutionized. They are not revolutionizing the mobile itself. They've just have like this hardware wallet that is embedded within the phone, making it super easy to use a wallet, sign transactions. So it's embedded in the phone. And when you interact with application on your mobile, it's much easier, much secure, because it could also avoid you to use to phishing. Yeah,
that in itself is a space. The whole self-custody space is one that certainly requires further evolutions from where it is now.
And,
so I mean, that's.
We saw the sales of there was the version 1. They sold like 20,000 units, and on the second version, they've already pre-ordered 1,000 unit. So it's 20K, 100K. It's already 5x. So it's still small number if you take the number of people who have a cell phone today. It's still very niche, but it's just like growing quite fast. So we can expect also Solana to be on the forefront with the user experience as well.
We could cover Avalanche, but I think we're probably a bit short of time, and we could have covered hundreds others as well. Say Sui, Celestia. There's so many other. Binance Chain. Marco, you seem to have something to interject before I maybe move on to the closing remarks.
When we look up just the two things, specifically about Ethereum, which has, you don't see here in the table. Ethereum is it's not just a blockchain, but it's an evolving ecosystem. Outside of the dApps that exist on top of it, it has already launched basically two L2s rollups successfully. Subchain or chain, which are Arbitrum and Optimistic. Those two are the success of those two managed to impact the roadmap of Ethereum evolution. There's a roadmap for Ethereum evolution. The next to it is the proto-bank sharding. They have dropped from the roadmap the sharding chain, the shard chain, which was an idea to actually reduce fees and scale more Ethereum, because of the success of layer 2 rollups built on top of it. So if you want, I think at a certain point, Ethereum will get out of this table. Ethereum will be its own ecosystem with chain and side chain, or chain and main chain, and chains that are built on top of that evolve specific approach to technology. And whatever works get integrated into the below base layer, which will be Ethereum. So that's why I believe it's not in the same space, in the same regional space here. Like the evolution and the growth of the ecosystem is so much bigger. And just to remember, Ethereum has zero marketing. Like this is just for the sake of the technology to a certain extent, but also for just creating new usage. Solana has to rely, as Avalanche and any other, and it's correct, right? They are in a competitive ecosystem where they need to compete against each other, so they need to find new use case, new approach to also connect to the audience and bring them on board. Ethereum doesn't have to do that. They don't care. They just make it better. That's it. If there is one user or a million user, they will not even think about it. I think that's a different approach, right? Of course, when we don't hear that much, to be honest, I mean, you need to be deep in crypto to understand the difference of those ecosystems. I think I agree with Maxime on the principle that those blockchains will be specialized. Avalanche, Solana has its own approach, has its own also target. I think Avalanche has its own as well. We can talk about BSC, we can talk about the others. They're specializing in what target audience you have. Ethereum is not. It's broad. It's really broad. I'm building an horizontal. Anyone who can build in can join in. I'm just trying to create a more evolved, more sophisticated, better that can bring forth more products on top, more L3s on top. That's it.
Thank you, Marco. I think that's really comprehensive and very fascinating and insightful. And hopefully it reiterates, as we said from the outset, while the world and the new entrants get excited about prices, it's really important to be able to understand what happens beneath those prices, what justifies those prices, and maybe even help you understand whether they are the right prices or not. So it is only a start of a 10 in terms of a technical analysis and overview of different blockchain characteristics, but it might help the viewer to think about how to interpret whether ETH or Solana or Avalanche or whatever might be the token is a good investment for the future. It's important to understand what the characteristics are beneath that token, and that will give them further gravitas in terms of whether that might be a good decision or not. We're drawing towards an end, guys. Any final remarks, closing remarks? I know, Maxime, I think you raised a good point and want to just shed light on an important factor, which is that of the human capital backing up these ecosystems in terms of development work. You want to just take us through this slide? I think it's pretty self-explanatory.
Yeah, it's explanatory, and we have to keep in mind, while even though Bitcoin has still 50% of the market share in terms of value, as Marco mentioned, like you can see that Ethereum is like the #1 ecosystem with probably close to 90% of the devs. And often what we have to mention is those devs, they are counted twice. So as Ethereum and sometimes working on other rollups or other blockchain as well. So when some blockchains claim to have a certain number of devs, sometimes it's Ethereum devs dedicated time to other blockchain or other projects. So yeah, from there, we can definitely say that, yeah, Ethereum is far away in terms of ecosystem and development. There is yeah, no trade-off here.
Marco, anything else from you?
No, it's important. There is no maybe for people who do not like, users are sometimes feel segregated. Developers, they are much less segregated than the users themselves. As Maxime was saying, like if I'm a developer in Ethereum and I see something that can help Solana and the code is public, that's extremely important to understand. If you're working for Coca-Cola, you're not working for Pepsi. If you're working for Ethereum and something is good that can be replicated on Solana, that's shared. That's a massive change. And I think just out of this, if you're listening to this, start to think the difference when we talk crypto. Don't just look at the end of the chain. Let me use this word. Not just at the end of the whole funnel, which is the use case and the platform that you see. There is a lot that built behind and has a completely different framework than what you're used to with companies, governments, and so on. That is the important part. That is the fundamental shift in philosophy and in devolution. The latest, like the end of the chain, where you see the platform that you're using or the exchange that you're using to trade, that's just a piece of the whole iceberg. Do not focus on the piece on the top of the iceberg. Focus on what's behind, on what's below the surface.
Well put, Marco. I think we've come to an end. As always, we hope you found this interesting, insightful, and don't forget to give us a follow on any of our platforms. And if you did like this, share it with your friends and family. See you next time, guys, and thanks so much, Marco and Maxime.
Thank you, Francesco, and see you next time.
Thanks. Cheers.
I hope you enjoyed our video. If you found the video informative, please don't forget to follow our channel and click the alarm button to be informed of new videos coming through. There is plenty to learn and get your head around on your journey to mastering crypto. Thanks for watching and see you on our next video.